Welcome to Power Charting. I'm your host, Bruce Fraser. Energy heats up. What can we expect next from the energy sector of the economy, of the market? We're going to do a crude oil and gasoline case study. And then we're going to follow up with a stock market update and a stock market study, which I think is absolutely fascinating. And there's so much good stuff here. I just couldn't even imagine trying to do it without the help of Johni Scan. John Colucci, thank you for being here.
Great to be here, Professor. Pleasure as always.
Well, I'm grateful. As you can all tell, I'm still not quite 100% yet. And so John's here to round out the flat spots anyway, and bring his wisdom to our discussion. But what I want to do to start, John, is talk about last week's C.P.I. number, which came in at slightly over 8.6%, and that was a new high for the cycle. And I believe the last high was 8.5. And the case that I want to make today, and the reason we're going to do an energy case study, is that if we look at the C.P.I. and we kind of break it down into its essential components, the all items was 1%. So that's compounded more than a 12% inflation rate going forward. If C.P.I. continues on at this clip from here forward, which let's hope that is not the case. But John, the part that I found so interesting was that if you looked at the motor vehicle component, motor fuels 4.1% month over month. So top line C.P.I. 1%, motor fuels 4.1%. And the energy sector as a whole, 3.9%. And so my feeling is, this is just back of the envelope kind of stuff, is that as long as we have energy outpacing C.P.I., energy, we all know, just infects everything that's in the C.P.I. Everything's got to be trucked to market. Everything's got to travel. And so my sense is that we got to keep a really close eye on the energy sector and really know where it's going. And that's kind of what I want to talk about today. What do you think, John?
Absolutely. It winds its way through everything. It's a big issue.
Now, you drive a big old honking vehicle because you do a lot of construction work. And are you finding the price of filling up that gigantic vehicle that you have that you haul stuff around in more expensive?
Shocking. It's really shocking. Just $50 a tank year over year. Really crazy.
$50 a tank. Wow.
Yeah,
Well,
80 to 130.
You know, I was thinking about our wonderful Wyckoff family over the weekend, and sort of how this all came to pass is that thinking about how we could best understand and express the whole energy thing. And this is really kind of where the idea of today came from. And so, you know, it may look like bad news that we're going to offer here. As a matter of fact, John said to me before we recorded, he says, you're just kind of gloomy, aren't you? And it's like, well, I report, you decide. But I do think there is maybe the potential for a glimmer of hope in this. So, John, we're looking here at the point and figure count, 3-box method, 2-point scaling. This is $2 per scaling change on crude oil. And this chart is the chart we've been working with for a long time. And you and I have talked about this a lot. And this count objective 112, 92, 112, we basically climaxed above it spent like 3 trading days above the 112 level, and then fell right back into the structure. And then we have been in a range bound condition ever since, even to this moment. And so, as painful as all this seems right now, the energy crude oil sector is not really rising, even though it's at $120. So I know that's not particularly great news, but look at these counts, John. So this is what you do in point figure, is we extend our counts. As soon as we fulfill our initial base count here, we then look to see whether there's a larger count. And we go out, and sure enough, there is a larger count out here. And we take this count. This count is a little scary, goes 182,238. And now, if we take this count area here, we get a stepping stone reconfirming count that now gets us to the minimum level of 182 on the base count, the accumulation count, and the reaccumulation count. So, John, this is worrisome. So
Well, Professor, I don't know if this is your idea of good news. What is your idea of bad news?
Well,
my goodness.
Well, what I am saying is that we are range bound here. 130 on the high end, 92, 94 on the bottom end. And that we have not rallied. These rallies have been not really great thrusting actions. Now I'm talking just about price action. I'm not talking qualitatively about crude oil. And I believe that it's possible that we could see crude oil back down to the area of support again, and maybe even below that, because I do believe that the administration is now serious about trying to better supply the market with crude oil and gasoline. So that is, I'm seeing that now. Whether it actually happens or not, I don't know. But this could be a reason to expect this to return to the bottom of this trading range. And then we can make a bigger judgment about whether it's distribution or not, and that this is all there is. So that's my hope. That's the hopeful part. So,
well, I'm hopeful too.
Yeah, and yeah, for the sake of everybody, I talk to people every day who are just in serious pain about this gasoline thing. So it occurred to me, we should be talking about gasoline, and we should do an analysis, a case study on gasoline. And so I went back, this is back to 06, and look at these great counts. So here's a count that where the low is 80 cents, if you can imagine that, 180 at the count line across here. And then this gave us a count 290 to 390. And look at how well this worked. And then we take the midpoint, which is the dotted line at 140. That's exactly where it went. And this produced, look at this, it looks like a reaccumulation like we just analyzed in crude oil, but look at the breakdown. So maybe that's in our future, especially if the economy continues to slow. And so this decline here took us into a count structure from 2014 to 2021, where it had a spring. This is gasoline, motor fuels, a spring, and changed its character after the spring. Here's the test, and then a rally up and out of the accumulation area and a backup, all classic Wyckoffian conditions. And so we want to count that. So the smaller count here, John, 19 columns, takes us 620 to 670. So still substantially higher than where we are right now. And I'll get to that in a minute, but you can see here that we just touched on this 430. By the way, this is 3-box reversal, 1/10 of a point scaling. So now that's a kind of a scary count because this is a big cause. We can then take the backup here and we can count the backup over, and this takes us scarily 8 to 940. Now, this is per gallon, and it's wholesale. It's not retail. Now, what's the good news in this? So
That's what I'm waiting for.
anyway, okay. The good news is this area right here. So this is a pause at this key resistance area. You can see it up thrusted it and then consolidated, built a reaccumulation cause, then a count, came out. Well, look what it did. It went right up to the count objective, 430, missed it by a tenth of a point, and then $5 is the extreme count in the range. Okay, so let's keep this in mind and move on. And by the way, this is a really interesting distribution count, and it worked so beautifully on that spring. Now, here is what I want to look at. This is the rally phase going back. This is this area right here. So this is just going into a swing trading count, one box reversal, tenth of a point, and look at these two beautiful reaccumulations in the uptrend. And this is why we love reaccumulations and we love to trade them, because these are the pauses in a vibrant uptrend that are very tradable. So here is a reaccumulation that counts from the low at 190, counts up to 320, 345. And then here's another count that goes across this area, which is more of a hinge type structure. And this count across here takes us 430 to 480. And then look what we did. We went to 430. Here's the part, here's the good news. So I'm going to slow down here so we don't miss it, because look at the reaction that we got off hitting the minimum objective. This is a key to point and figure, is that whether you throw over like we did here, or whether you go to the minimum objective, it's the reversal that gives you confirmation of the essential quality of the count that you made earlier. And so they're quite important. And then we see here that this count of 430, it climaxed, tested it, and then look at the break here. That break is pretty substantial, which is like an automatic reaction in Wyckoff terms, which if it continues, excuse me, it's going to go into this count structure, which shows that this is exhaustion of the move. What do you think, John? Is that better news?
Well, if it's gearing up for distribution, I'm with you 100%, but it very well could be reaccumulation for those higher counts.
There's absolutely no question that could be the case. What we're doing is we're saying that maybe we get an extended period of a range-bound condition. Not great because prices aren't falling. But the other thing that can happen in this kind of a scenario is that you can get a more important reaction. And let's hope for that. So I believe that would be nice. And let's kind of hope for that. And then over here, let me blow this up. And so you can see that this is a one box method. This is the same uptrend we just analyzed. This also is good news. I don't want anybody to miss this. I believe there's the hint of good news in this. And that is that you can see here that there's an accumulation structure back to 2018 in gasoline. And this accumulation structure, counting across the whole width of it, goes 380, 520. So it's very, very similar to the counts we were just looking at. Here's our reaccumulation, the one we just looked at in the prior chart. And this count here counts up to 430, well, and I've got it going to 480. So reaccumulation confirming count of the accumulation count. So we, at two levels, we are fulfilling our count. Now, I don't have the most recent entry in this, which is down to this 370, 380 level. But this, if this now corrects this, it may be correcting the whole up move. And may result in, maybe it can even get down to the level of this $3 level, which is prior support, and then builds maybe a larger distribution, or maybe it's just range bound between 3 and 4 for some period of time. What do you think,
Let's
John?
hope. Let's hope.
Yeah. Okay, well, a couple more minutes and then we have a scan we want to show you, and that is this is the point and figure chart of the NDX. We're coming into the end of the quarter again, but we're making new lows. So we said last week, problem with the end of the quarter is it can become very volatile, and there's no telling how low is. And so there is really indiscriminate selling, which I think is a lot of that is supply being presented by institutions that are doing window dressing in their portfolios, and they're getting rid of the stocks that have not been at all good in their portfolios. Now, I want to just show you this one thing. And this is a trend study of the S&P, and I want to show you the quarter ends, because here's the quarter end in September of 21. Here is the year end, which was the final top in the market. Here is a quarter end here, which was a peak, LPSY, and now we're coming into a new quarter end right here, mid-year 22, right there. And you can see the indiscriminate selling all the way down. As a matter of fact, John, you were commenting earlier about how volatile and violent this decline's been with these gaps. Any thoughts on this?
A lot of gaps. I have not really seen a move that aggressive on the gaps, and it really highlights what I believe is an emerging trend in trading, and that is the predominance of the Asian markets. A lot of this is occurring in extended hours. The gaps are created. The big down moves, such as last night, gave up over 2% in the extended hours, started in the Asian session, carried through London, and then New York drove it home. So more of a worldwide phenomenon, it would seem.
Fascinating, very fascinating. So notice also that we have a downtrending channel. We are under it, which could be acceleration, but it wouldn't be surprising here if in this downtrend, maybe it did attempt sometime between now and early July to get back into the channel, and that this could just be an extreme decline because of the quarter end selling. And so here, this chart's really interesting because here's a minor distribution at the top, end of the year right here. Here's our redistribution. This is the S&P, one box reversal swing trading count. And it goes down 3,900, 3,800. Well, we're already well below it right here. And this 3650, I think is what you said, John, today so far.
Yeah, it's rallied a little bit now, but it's a bad day.
Bad day. And and this is the day after the Fed announcement. So now, does it have to stop here because we have a redistribution count? Well, actually, no. And this is why. Here is the larger distribution count. And all I'm doing is a one box swing reversal type count structure, but you can see this is a classic distribution series of signs of weakness, ever increasing volatility, and then this count across here, 31 columns at standard scaling, which is 50 points for the S&P. So what does this count to? It counts to 2950, 3250, and we're at 3650 now. So we have room to go. And the thing is that distribution is complete across here. And so this distribution could be what's in force and could drive the market down. continue to drive it down. This is why we need to be really good risk managers and be really careful. If we are trying to swing trade rallies, we keep our stops really, really tight and we trade small. So, with that, John, shall we take some time and do your scan?
Absolutely.
Okay, hold on here. We'll be right back. Next week, with John's help, we are going to talk about the character of bear markets and the character of bear market rallies. And I think this will be just a fantastic quarter end event. And so mark your calendar. I want you to be here with us. Anyway, John, take it away.
Great. Well, we've got our scanning special coming up in July, starting July 14th. Professor Bruce and I will be doing a 3-part series on the finer points of scanning entitled Look Less, See More. So that's going to be a real great show. And here is the landing page for that at the Wyckoff Analytics site. You can sign up and attend live or view the recording. So let's take a quick look at a scan developer today, and that is, we've talked a lot about gasoline. Can we find out what is moving in sympathy with gasoline? And we can do that using the correlation feature of StockCharts. Using a correlation command allows us to select a period of time and a target for the correlation, in this case UGA, the gasoline ETF, and we're asking that we have a fairly strong correlation above 0.7. 1 is a perfect correlation, 0, no correlation, -1, opposite, inversely related. We're also going to rank this by the strength of the correlation. Our target areas for scanning here are the Dow, S&P 500, NASDAQ, SP 400. So let's take a look at what happens when we run this scan. Out of all that universe of stocks, we have 38 potential candidates here reported back to us. And we see that we did achieve a fairly strong correlation all the way up to a 0.941, almost a perfect correlation. And that's an oldie but goodie, Sinclair. Remember the old Sinclair stations with the dinosaur?
You know what?
Professor?
There's one downtown.
Wow.
With a big dinosaur. Yeah.
Yep.
Now I want to ask you about Monster Beverage. Do you think that Monster Beverage has gasoline in it? Or, I mean, I know, or it acts like gasoline in the human body.
Well, that's probably it. But I'll tell you,
Yeah.
that's the interesting point on correlation. Correlation is not causation. I'll show you what I mean.
By the way,
Here
we
we
know Monster Beverage doesn't have gasoline in it, so I don't want to lead anybody astray here.
No, but a lot of people will call it go-go juice. So,
Yeah, there you go. That's it. Yeah.
so here's our correlation subject, UGA, United States Gasoline Fund, and we see essentially it's gone up consistently over a period of time, rising OBV, rising relative strength, a little bit of pullback recently.
Which
but
we saw in the point and figure work, and that's fantastic.
Yeah,
That makes us
that's the
happy.
good news.
That's yes.
So what we have is anything that's moving in a manner similar to UGA is going to exhibit the correlation. Although it might be unrelated, it's simply the case that it's moving in sympathy with that. Its chart pattern is the same. That creates the correlation. It's not causation. You can get gasoline moving in sympathy with food and may be totally unrelated. It just happens to be the fact that the chart is moving in the same direction. So here is UGA, and let's take a look at our first candidate, Dino Sinclair. Very, very long accumulation period.
Wow. Yeah.
Tough move down of late, but has the 0.94 correlation with
And
UGA.
look at the climax that came at the end, and then the sharp break off the climax. I mean, those are the two conditions: buying climax, automatic reaction, range bound condition. So that
and we're not done yet.
And we're not done yet. Absolutely true.
Big move down today. So
Yeah.
energy giving some back is perhaps an anticipation of a slowing economy, an overburdened consumer. You know, for the average person, another 50, 60, 30, $40 per tank of gas means that they are not going to buy something else. So it is significant for many, many people.
Yeah. By the
And we're
way,
seeing that.
retail numbers, I meant to point this out, I don't know if I did or not, but the retail sales were down 0.3% month over month. An unexpected number. Anyway, carry on. I just wanted to make that point.
So
I think it's
there's
related to the point you just made.
Yes, so there is the use of the correlation feature in the stock chart scanning engine. Very, very powerful, very, very interesting feature, but you have to take it with a grain of salt because not everything that correlates is in any way causally related. The high price of gasoline is impacting the earnings of some of these companies, and we're seeing that. So scanning part 4 coming up. Scan efficiently, look less, see more. We've got a very dynamic show coming up there, and Professor Bruce and I will be hosting that starting July 14th. So that is the next special coming up, and we've got some very interesting different scanning aspects in session 3. Something we're working on very diligently now is the ability to use scanning to help us manage our watch list and portfolios. Very important stuff. Professor Bruce, huge contributor in that content. Looking forward to it.
Thank you, John. Thanks for being here. Appreciate your help a lot.
All righty. Thank you, Professor.
See you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.